Good evening. In a move that stunned both Washington and Wall Street, Canada has just upended the global trade landscape. Early this morning, Canadian officials finalized a $214 billion agreement with some of America's most vital trading partners. This is more than a headline. It's a seismic shift in economic power. The so-called Maple Pact creates a new superhighway for trade, bypassing traditional U.S. channels and linking Canada directly to key global markets. The announcement, made from Ottawa, was a bombshell, carefully timed for maximum impact. Lawmakers and economists across the U.S. are scrambling to understand what this means for American workers and businesses. For decades, the U.S. has been the economic anchor of North America. Today, that foundation has been shaken. Canada, long seen as a quiet partner, has stepped onto the world stage with unprecedented confidence. The ripple effects will touch everything from auto plants in Michigan to tech hubs in California. This isn't just a trade agreement, it's a declaration of economic independence from America's closest ally. Tonight, we break down what we know, who's involved, and what this bold move means for the US and the world. Stay with us. So, what is the Maple Pact? At its core, it's a sweeping free trade agreement between Canada and a coalition of powerful economies. The initial commitments total $214 billion over 5 years, covering everything from advanced manufacturing and agriculture to digital services and critical minerals. The pact establishes Canada as the central hub for trade and investment among its partners, rerouting goods and capital that once flowed through the U.S. It includes joint investment in Canadian ports and infrastructure to handle a surge in global trade. The agreement goes beyond tariffs, with provisions for shared R&D in AI, clean energy, and biotech, plus streamlined movement for skilled workers. It's a strategic response to recent global supply chain vulnerabilities. Imagine your neighbor building a new, exclusive shopping mall. Canada just did that on a global scale. The US, once the superstore of the world economy, wasn't invited to the grand opening, and $214 billion is just the beginning. Who joined Canada in this historic alliance? The answer is a geopolitical shock. The Maple Pact's signatories include Germany and Japan, two of America's largest trading partners. Their decision to anchor this new pact with Canada, not the US, is a major statement. South Korea and Mexico are also on board, each bringing advanced manufacturing, technology, and strategic geography. Mexico's participation is especially significant, signaling a pivot away from its traditional U.S. dependence. Each country brings unique strengths: German engineering, Japanese tech, Korean semiconductors, Mexican manufacturing, and Canada's resources. Together, they form a powerful, complementary economic force. For decades, the U.S. was the hub for these nations' trade. The Maple Pact creates a new center of gravity. Canada is now the facilitator of a coalition of equals. The message stability and diversification matter more than ever. In a world of trade disputes and uncertainty, these countries are betting on Canada as a reliable partner. The US now finds itself on the outside, looking in. The global balance has shifted. How did this happen without Washington noticing? The answer: masterful secrecy. For months, Canadian, German, Japanese, Korean, and Mexican officials negotiated through secure, decentralized channels, avoiding U.S. intelligence. Bilateral talks were woven together by Canadian diplomats, preventing leaks. The U.S. focus on China and Russia created a blind spot, and old assumptions about allied loyalty proved outdated. Recent American trade unpredictability, tariffs, trade wars, and America first made allies wary. Canada's reputation for stability and multilateralism became a magnet for partners seeking predictability. The U.S. inadvertently pushed its closest allies to seek a more stable arrangement elsewhere. The shock in Washington is real. This deal challenges the very core of America's post-war economic strategy. The Maple Pact isn't anti-American. It's simply not about America at all. For U.S. policymakers, it's a wake-up call and a moment of reckoning. The world is moving on. What does this mean for American jobs? The impact could be profound. In manufacturing, especially autos, supply chains may shift. Parts made in Mexico, assembled in Canada, sold within the pact, never touching U.S. soil. Thousands of American auto jobs are at risk. Agriculture is also vulnerable. Canadian farmers now get preferential access to Mexico, Japan, and South Korea, markets U.S. farmers have long dominated. U.S. logistics and transportation jobs could erode as trade reroutes through Canadian ports. Every container offloaded in Vancouver instead of Los Angeles means lost work for American longshoremen and truckers. While some U.S. tech firms might find new opportunities, the immediate impact is likely negative. American workers are no longer on a level playing field. The pressure on U.S. jobs is real and just beginning. For American businesses, the Maple Pact redraws the competitive map overnight. Companies built on seamless North American supply chains now face higher costs or must consider relocating operations to Canada or Mexico. Small and medium-sized enterprises, deeply rooted in local communities, are especially vulnerable. Their cross-border advantages could vanish overnight, stifling investment and hiring. Yet, crisis can spark innovation. The deal could push U.S. industry to invest in automation, reshoring, and local supply chains. The challenge: navigating a painful transition as the economy adjusts. The most successful companies will adapt quickly, forging new partnerships and exploring new markets. The era of predictable North American trade is over. Turbulence is the new normal. The Maple Pact could alter the very trajectory of the U.S. economy. For decades, the U.S. dollar's dominance was underpinned by global trade. Now, a $214 billion bloc may settle trade in Canadian dollars or euros. It's a small crack in dollar supremacy, but it could widen. Foreign investment may shift north, with Canada now a more attractive base for global companies. The Pact's R&D provisions create a new innovation ecosystem outside Silicon Valley, drawing talent and capital away from the U.S. America can no longer assume it's the default destination for investment or breakthroughs. The U.S. must rethink its strategy, become more competitive, agile, and collaborative. That means new trade deals, infrastructure investment, and repairing diplomatic ties. The world isn't waiting for America to catch up. This is a moment of extraordinary triumph for Canada. Long overshadowed by its southern neighbor, Canada has executed a bold, strategic play. The Maple Pact elevates Canada to the center of a powerful new trade network. The benefits: hundreds of thousands of new jobs, surging investment, and a nation-building infrastructure boom. Politically, Canada now wields unprecedented international influence. No longer just a partner, but an architect. This newfound independence will reshape its relationship with the U.S., moving toward a more equal partnership. Canada's bet on stability and multilateralism has paid off. By uniting economic giants from 3 continents, Canada has set a new model for global cooperation. It has stepped onto the center of the world stage. The $214 billion Maple Pact is more than a regional story. It's a new chapter in global commerce. The era of U.S. economic dominance is giving way to a multipolar world. Middle powers like Canada can now shape their own destinies and create new centers of influence. The immediate challenge falls to the U.S. Respond with strategy, not rhetoric. America must rebuild trust, invest in competitiveness, and adapt to this new landscape. The Maple Pact offers a blueprint for others, a third way beyond the U.S. or China. If it succeeds, similar alliances may emerge, decentralizing global economic power. Nothing is permanent, alliances shift, and the future is never guaranteed. The world of trade has changed, and we're all living in the world this deal has made. The world is watching.